Amrita, let's just start right there on natural gas. Where's my supply response?
Well, all of these things take time, right? And I think ultimately, and look, we've talked about this, and I know you were speaking to James last week as well. The near term, we are constrained because of the lack of Russian volumes. Chinese demand has still been very, very good. You're not going to get the response overnight. But while prices, say, next year should come off from these crazy levels, you've got Nord Stream 2 starting up. Structurally, we do think prices are going to be higher because ultimately, this is what happens when you are pushing energy transition to the extent that policymakers and companies are pushing it. You're retiring coal plants in OECD, for instance. So now gas has to become base load for power generation. And you are therefore going to get structurally higher gas prices, which then has impact on oil as well, right? Because at the margin, oil is now getting called on for power generation. It is a bit crazy. It sounds like we're in the 1970s.
OK, let's think about that. What are the price implications for the other energy assets? We know that gas has gone up. We've seen oil prices climbing. Brent's at 49, 46 right now. How much more of the gas effect has yet to bleed into the other calories, as it were?
I mean, just a few weeks ago, oil, effectively, like, say, Brent or Brent-related or linked products, were the cheapest energy product in the world. And, of course, I'm including carbon costs when you consider coal. And that's why you've seen the oil rally. You know, we've been saying for the last few weeks that, look, we do think oil is poised to break higher, and Brent about $80. I mean, if there was one time in the year it would have done it, it would have been now. And that's why you've seen the move higher in Brent. Now, this is... It becomes a question of at what point do you choke off economic growth, right? This isn't an infinite amount that can switch into oil. I think that's the critical thing right now, that we are switching off a lot of industrial activity in Europe, in places like China. So this has big implications. And again, going back into the transition side of things, it becomes a question for policymakers that what are they willing to tolerate? And remember, we're coming into winter. Are we willing to tolerate like switching off lights and not having power if it's a cold winter versus clean blue skies? I think this is a really interesting winter coming up because of that.
Well, Amrita, also, if you just take a look at the curve's re-rated higher just in the last month alone as well. I mean, you're basically seeing a nice sharp divergence over the next year. And I wonder, what does OPEC do with that? What does the U.S. do with that? Because President Biden, for example, is not going to like $80 oil, but it's hard to go to U.S. producers and say pump more when the path of least resistance is pump less because of carbon emissions. OPEC also, Saudi Arabia might not like the $80 oil because of that demand destruction.
Absolutely. And this is very tricky for OPEC, right? On the one hand, if you remember, just the last meeting, we were talking about prices below 70, but they stood their course and said, we're going to bring back the 400,000. The meeting that's next week on Monday, they're going to do a very similar thing. They will bring back another 400,000 barrels per day to the market. So again, the drip feed will continue. They're going to keep bringing this back to the market. But again, these are very small volumes, right? And we are looking ahead and into a winter period. If it is a cold winter, then that will get absorbed very quickly. The question becomes the demand destruction. At $80, you're definitely biting into that. For a lot of non-OECD countries, China, India, let's not forget India, that's why you're getting both these countries released from their SPR. And you're going to constantly get this tussle. But I do want to highlight the fact for oil, inventories are extremely low around the world. So there isn't that much of a buffer. Ultimately, you know, if prices go too high, OPEC will have to come back to the table and say, OK, we had decided it'll be 400 a day each month. Maybe we do need to bring back more quicker. That's not going to happen straight away. But absolutely, that can happen in a couple of months' time.
Quick question on Russia. What does Russia do next? The pressure is mounting, but obviously it's got its own stocks to fill. When do we start to see noises coming out of Russia that it is going to pump more? Is it after Nord Stream 2 has been given its certification?
I think so, yes. I mean, right now, if you look at or just hear what is coming out of them, not very much. And yeah, absolutely, internal or domestic inventory filling is very, very important. But politically, of course, they're going to wait for Nord Stream 2 to come online.